is Mary Beth Harrison with Dallas Native Voice, and I'm sitting here with my friend Mortgage Mark, and I want to debunk all the myths about mortgage shopping. Can I shop for a mortgage, or you going to mess with my credit if I go from one lender to another and have them pull my credit? How does this work?
Great question. So to answer your question with the generic, will it hurt your credit? No. I mean, you hear it often. People say if you have your credit pulled too many times, it will hurt you.
Yes.
True when shopping for like credit cards. But for home and autos, the way I tell people is understand it this way: the credit models don't want to penalize you for being an informed consumer.
Okay.
In order for us to give you a good estimate to know what you're looking at or know if you're qualified, we have to run your credit. So that is a hard pull. Now understand, if you go across the street and another lender does the same, it really won't hurt you. Okay. I mean, on average, you might say 1 to 3 points in your score.
Right.
I would tell you if you're somebody that, something's happened in the past and your credit is just barely getting by for guidelines, a little more cautious. But the record I've seen personally is somebody went to 41 different lenders.
Wow. I
don't know what they did during the day at their job.
Seriously.
That's a lot of tests, but they still had A+ credit. So to the point, you can pull the inquiries. So the mortgage world and auto world, you can pull it, and all those inquiries will essentially, within a time period, be seen as one credit inquiry.
Okay, because what I tell my clients is you're going to be living with this person, with the mortgage person, just as you are living with the realtor for a while. And so you want to find a personality that you gel with, but more importantly, you want to go somewhere where you're going to receive some service. So many of these companies and a lot of the online companies, not to say some of them aren't great, but I just find you never talk to the same person twice. Right. And that's so frustrating. And when you want answers or you want to understand the process, this is the biggest purchase that most of these people are ever going to make.
Oh,
so
absolutely.
You want someone you can ask the questions to, but more important for me is I want you to answer the question I should have asked, but I didn't know to ask it. So yeah, we're looking to you for knowledge in this process.
And it's guidance too. So for example, you pull your credit, we now see, it's funny, you open the kimono, right?
Yeah.
We see everything, how much you make, what you got in debts, and everything of that nature. So we can help guide you. So in other words, I got a lot of folks that will say, well, man, I want to pay my couple bills off before I have you pull my credit.
Yes.
Pull it now. Reason being is credit is a snapshot in time. It's that moment, typically about 30 to 45 days ago.
Right.
And we can, with clicks of buttons, we can either omit or just get credit updated. It costs like $15 per trade line to do, and it's 3 to 5 days to do it.
So if you look at my credit and you see some dings on there, maybe I was 30 days late in a pay a year ago, or whatever blemishes might be on my
good,
credit.
bad, or ugly.
Can you look at it and go, if you'll pay off A, B, and C, we'll bring your credit score up and you'll be able to do this?
There's simulators we can run.
Okay.
So let's just take something we can fix today. Something that happened in the past. Look, you can perhaps have that removed or challenged, but that's another level. Let's go with something easy.
Yeah.
You owe $1,000 on a credit card that you pay off every month.
Right.
If that balance of $1,000 is also the credit limit of $1,000, you're maxed out.
Okay, I see that.
If you call and get your credit card limit up to $5,000, you're now at 20%, no longer maxed out, and that will get you a few extra points.
Okay, interesting to know.
Is it worth you doing that? Depends.
Maybe
if your
not.
Credit's great, let's not create more work for either one of us.
Right.
So again, having that professional that you live with for a long time, we can help coach you. It's also the point of we'll coach you to make sure you don't do something silly in the process.
Oh yes, that's really important. Let's talk about that, because I really tell my clients, do not go out and spend a lot of money or take credit in anything other than basically your insurance company's going to want to pull credit to do your home insurance. But you don't want to go buy a new car, buy furniture, buy appliances. You don't want to do any of that while you're in the mortgage process, right?
Until it's closed.
Right.
Some companies, we don't, but some companies do pull credit right before closing. They'll even pull inquiries. It may not even be a new report, but they're going to see BMW Financial or XYZ Furniture, an inquiry that occurred last week, and all of a sudden, if that debt's not included on the credit, we got to go back to underwriting. And maybe somebody can afford it. That's not the piece. It's you have to go back in the process and wait in line, and it could delay funding or closing.
Absolutely.
Again, I tell folks, do what you've been doing. live normal,
Right.
but don't go buy something new without calling first.
Right.
Let's figure it out, and if you can wait to get that fridge and washer and dryer the day after, more power to you. But let's close first and get it done.
I can remember sitting in a closing many, many years ago, and the lender was there at the closing, and I was there at the closing, and he started bragging about his new car that he just bought, and the lender scooped up all the documents and walked out the door. It's like, this party is over. So we don't want that to happen. So for more information on this or any other part of the buying process or the mortgage process, you can find us at dallasnative.com or any of the social media. And thanks for listening.